My name is CA Ashish Singhal. Today we are going to be discussing the provisions of tax collected at source. We are going to be doing this video in the form of frequently asked questions on tax collected on source on sale consideration under section 206C1H. Let me give you a little background of this section. The section was introduced by Finance Act 2020. The new provisions of this section states that a seller needs to collect a tax from the buyer of the goods from whom the seller has received any amount as consideration for sale exceeding rupees 50 lakh rupees during the financial year. The provisions of this section are applicable from first day of October 2020, and in general the sale of goods exclude the sale of motor vehicle and some other specified good which we are going to be covering in this section. In this video we are going to be looking at each aspect of this section and the practical applicability of the same. So the first question which comes to my mind is, who is liable to collect TCS? So every person who is a seller. Now who is a seller? A seller may be a person who is an individual, a HUF, a firm, a LLP, company, AOP, artificial judicial person, any charitable trust, whether these are resident or non-resident. If the person is a seller, then the provisions of this section will be applicable and the seller will need to collect the tax from the buyer on sale of goods. So the next question is whether all the sellers are liable to collect tax and remit the same to Government of India. The answer to this question is no. Only the seller whose total sales, gross receipts or turnover in the previous financial year has exceeded rupees 10 crore, only those sellers are liable to collect tax and remit the same to the government. Let's understand this by an example. Current financial year is 2020-21. So if the sales or the gross receipts or turnover of any seller for the last financial year, which is 1920, if it has exceeded rupees 10 crore, then the seller is liable to collect TCS and remit the same to the government. This is irrespective of whether the sales in the current year are below 10 crore or more than 10 crore. What needs to be seen for the applicability of this section is the turnover of seller for the previous financial year. Next question is whether any sellers are exempted by government from the provisions of this section. The answer to this question is no. However, central government may issue a notification in the official gazette and can exempt a person or a category of person with respect to the terms and conditions as may be specified in that notification. So the next question is, from whom this tax shall be collected? The tax must be collected by the seller from the buyer from whom seller has received any amount as consideration for sale of any goods of value or aggregate of such value exceeding rupees 50 lakh during the current financial year. So the next question is, what are the sales which are exempted from the provisions of this section? In the introduction itself, we have discussed that the provision of this section are applicable on sale of goods, excluding sale of motor vehicle and some other specified goods. So this question states the list of those other specified goods on the sale of which the provision of the sections are not applicable. So the second item is sale of certain goods which are mentioned in section 206C1. The sale of these goods is already taxable under section 206C1. Hence, we will not be collecting the tax on sale of these goods under section 206C1H. These are alcoholic liquor for human consumption, tendu leaves, timber obtained under forest lease, timber obtained under any other mode or any other forest produce. Next is scrap. Next is mineral, being coal, ignite oil, ignite or iron ore. Third is remittance of money through authorized dealer. Fourth is sale of overseas tour packages. Next is sale of motor vehicle exceeding. Next is sale of motor vehicle for value exceeding rupees 10 lakh. If the motor vehicle is sold for a value which is less than 10 lakh, the provisions of this section will not be applicable. However, if the seller has made a sale of motor vehicle for value exceeding rupees 10 lakh, then provision of this section 206C1F will be applicable. So the next question is, who are the buyers which are exempted from the provisions of this section? Let's read the answer. The following buyers are exempted. First is sale consideration from the buyer in aggregate does not exceed rupees 50 lakh. What we have learned so far is the provisions of TCS under section 206 C1H are applicable when the seller receives from the buyer for sale of goods any consideration for an amount which exceeds rupees 50 lakh. So if the amount of consideration in aggregate does not exceed 50 lakh, then the provisions of these sections are not applicable on such buyer. Next is the buyer who is liable to deduct tax under the provision of this act on goods purchased from the seller and the buyer has deducted such amount. Third is any central government, state government, embassy, high commission, consulate, trade representation of a foreign state. Fourth is a local authority which is defined in explanation to clause 20 of section 10. And last is any person who is importing any goods to India or any other person which is specified by central government by making a notification in an official gazette on such terms and conditions as may be specified in such notification. Next question is at what rate tax needs to be collected and at what point tax needs to be collected. So the seller shall collect the TCS from the buyer at the time of receipt of sale consideration. The next is at what rate tax needs to be collected. We will understand this in two situations. Situation 1 is where the buyer has provided the PAN and the Aadhaar number to the seller. In that case, seller shall collect the TCS on a sum equal to 0.1% of sale consideration exceeding rupees 50 lakh. The point to be noted here is for this financial year 2021, tax needs to be collected at the rate of 0.075% instead of 0.1% as per the press release of CBDT dated 13th May 2020. The other situation is if the buyer does not provide the PAN or Aadhaar card, in that case, the seller will collect the TCS at the rate of 1% of sale consideration exceeding rupees 50 lakh. Let's understand this situation by an example. The situation 1 where the buyer has purchased the goods worth rupees 60 lakh, buyer has now made the payment. So the seller will collect the TCS on rupees 10 lakh, that is the value which exceeds rupees 50 lakh, and the TCS will be collected at the rate of 0.1%. And for this financial year 2020-21, tax needs will be collected on 10 lakh rupees at the rate of 0.075% instead of 0.1% as per the press release by CBDT. Situation 2 is in the same example, buyer has not provided the Aadhaar card or the PAN number to the seller. Then the seller will be collecting the TCS on 10 lakh rupees at the rate of 1%. Next question is, when should the tax collected at source be remitted to the government? The tax collected at source shall be remitted to the government on 7th day of succeeding month from the month in which tax is collected at source. Let's understand this by an example. Let's assume a seller has collected a tax from the buyer in the month of October 20. As per the provisions of this section, the seller will be liable to remit the tax to the government by 7th November 2020. That is 7th day of the succeeding month from the month in which the tax is collected at source. Next question is, when should the statement showing the tax collected at source under section 206C1H be filed? That is the return of TCS collected from the buyers. So a quarterly return in form 27Q shall be filed for the tax collected at source under this section. The due dates for the same are as follows. For the quarter ending on 30th June, the due date for filing of return shall be 15th of July. For the quarter ending 30th September, due date shall be 15th of October. For the quarter ending on 31st December, due date shall be 15th of January. For the quarter ended on 31st March, due date shall be 15th May of the financial year, immediately following the financial year in which the collection is made. Let's understand the due date for the last quarter. So the financial year in India ends on 31st of March. So after the end of financial year, government allows 1.5 months, approximately 45 days to file the return for the last quarter, which ends on 31st March. Hence, for the quarter ended 31st March, due date of filing TCS return shall be 15th May of the financial year. With this, we have discussed the basic provisions of Section 206C1H around the applicability of TCS on sale of goods. In our next video, we will be covering all the practical aspects and practical difficulties faced by the assessees. We will be analyzing how do we need to assess the threshold of 10 crore for the seller, how do we need to analyze the gross receipts for the buyer of rupees 50 lakh. What if the seller and buyer are into multiple line of business? Should we need to club the turnover and receipts of buyer and seller to assess the threshold? Further, we will be discussing whether seller needs to charge the amount of TCS on the invoice when the provisions of this section are applicable. We will be discussing whether gross receipts for buyer will be calculated from 1st of April or from 1st of October. We will be analyzing whether sales consideration includes GST and other levies for the purpose of applicability of this section. Watch our next video to overcome the practical difficulties around this section. Signing off till then, bye bye.